Welcome to the lecture on partnership accounting. In this lecture, we will discuss about treatment of goodwill. At the time of admission of new partner, the incoming partner will bring capital as well as the amount of goodwill either in cash or in kind. So, there are two methods of treatment of goodwill: premium method and valuation method. Premium method is followed when the amount of goodwill which incoming partner has brought into the business is retained in the business or it is withdrawn by old partners. And valuation method is followed when there is a goodwill available in the balance sheet and it is raised in balance sheet or it is written off among partners. So the journal entry in either case will be: if goodwill is retained in the business, then first journal entry will be cash or bank account debit to goodwill account when incoming partner brings goodwill into the business in form of cash or check. Then the entry will be cash or bank account debit to goodwill account and it will be distributed among old partners in sacrifice ratio. So journal entry will be goodwill account debit to old partners in sacrifice ratio. The goodwill will be distributed among old partners in sacrifice ratio. If the amount of goodwill is retained in the business, then the entry will be cash bank account debit to goodwill account. First entry will be when incoming partner brings goodwill in form of cash. So entry will be cash bank account debit to goodwill account and the amount of goodwill will be distributed among old partners in sacrifice ratio. So the entry will be goodwill account debit to old partners capital account or current account in sacrifice ratio. If the amount of goodwill is withdrawn by old partners, then along with these two journal entries, third journal entry will be old partners capital account debit to cash or bank account, because old partners are receiver of the cash and cash is going out. So debit the receiver, partners are the receiver, old partners are receiver of cash. So old partners capital or current account will be debited to cash account because cash is going out. Credit what goes out. So when incoming partner brings goodwill in form of cash, the journal entry will be cash bank account debit to goodwill account. The amount of goodwill will be distributed among old partners in sacrifice ratio. The journal entry will be goodwill account debit to old partners capital or current account and amount will be distributed in sacrifice ratio. And if the amount is withdrawn by old partners, then along with these two entries, one more entry will be old partners capital account or current account debit to cash or bank account and it will be distributed in old ratio. One point to note here is if the incoming partner pays the amount of goodwill to old partners privately out of the business, then no journal entry will be appear in books of accounts. And under valuation method, if the amount of goodwill is raised in the balance sheet, the entry will be goodwill account debit to old partner's capital account or current account, and if the amount of goodwill is written off, then new partner's capital or current account debit to goodwill account. When the amount of goodwill is raised in balance sheet, then the entry will be goodwill account debit to old partner's capital account, and when it is written off, the goodwill is written off from the balance sheet, then the entry will be new partner's capital or current account debit to goodwill account. Here the amount will be distributed among old partners in old ratio, and in this case the amount of goodwill will be distributed among new partners in new ratio. So treatment of goodwill in premium method and valuation method: at the time of admission of a new partner, the incoming partner brings goodwill in form of cash. The entry will be cash bank account debit to goodwill account, and if it is retained in the business, then the amount will be distributed among old partners. The entry will be goodwill account debit to old partners capital account, and the amount will be distributed in sacrifice ratio. If the amount is withdrawn by old partners, then the entry will be old partners capital account debit to cash or bank account, and amount will be distributed in old ratio. And if the goodwill is raised in balance sheet, the entry will be goodwill account debit to old partners capital account, and the amount will be distributed in old ratio. And if the goodwill is written off from the balance sheet, then the entry will be new partners capital account debit to goodwill account.